The investor who beat the impossible odds. It began with a loss so devastating that most people would have walked away forever. A failure that shattered confidence, drained savings, and left one investor standing at the edge of a decision that would define the rest of his life. But instead of stepping back, he chose a path almost no one understood. One that would lead him into a battle against math, probability, and the weight of the entire market. This story matters now because every investor faces moments when the world insists they're wrong. Moments when numbers contradict dreams, when fear overshadows logic, and when the odds say to give up. Yet some of the greatest financial turnarounds happen when someone refuses to surrender to those odds. To understand how rare that resolve is, we need to revisit the journey of a man who defied every expectation. It started after his worst defeat. Years of gains vanished in a single catastrophic downturn. His models failed. His instincts failed. His confidence failed. Friends urged him to take a break. Advisors recommended liquidation. But instead, he dug deeper than he ever had before, into data, into history, into psychology of markets. And in that process, he found something no one else had noticed. A pattern hidden inside chaos. A recurring signal buried under noise. It wasn't a guarantee, not even close, but it was enough to spark a faint spark of conviction. He rebuilt quietly. No bold bets, no heroics, just small, precise trades aligned with the pattern he believed in. Every step forward felt fragile. Every pullback felt personal. Yet with each month, the strategy strengthened, supported by evidence instead of emotion. The early reveal came when his modest positions began generating consistent returns. Tiny victories at first, barely noticeable to anyone but him, but they confirmed what he hoped was true. The pattern was real, and if it held, it had the potential to reshape his entire future. Still, the odds remained against him. The market wasn't done testing his resolve, and the real battle was only just beginning. The pressure intensified as his small gains attracted attention. A few colleagues noticed the uptick in his performance and asked how he was doing it. He shared nothing. The pattern was fragile, still improving at scale, and he feared that even speaking it aloud might shatter the clarity he'd spent months rebuilding. The reveal deepened when he decided to increase his position size, not dramatically, but enough to test whether the pattern held under real weight. At first, the results mirrored his earlier success, but as the positions grew, so did the volatility. The signals he relied on flickered, shifted, bent under pressure. Some trades reversed sharply. Others stalled at the edge of profit. His confidence thinned with each ambiguous tick. Friends warned him again. They reminded him of the past losses, the pain he'd endured, the danger of scaling too soon. But he wasn't chasing redemption. He was following evidence that sometimes strengthened, sometimes faltered, but always pointed toward a deeper truth he couldn't ignore. The early conflict emerged when the market delivered a blow that rattled him to his core. A sudden macro shock, unexpected, violent, sent prices tumbling in ways his pattern didn't anticipate. His positions dipped into losses, not catastrophic ones, but enough to reopen old wounds, enough to make him question whether he had mistaken randomness for insight. For a moment, he considered abandoning the strategy. He stared at the charts, replaying every decision, searching for flaws. The logic was sound. The data supported it. Yet doubt spread like ink in water, tinting every thought. He stepped back, reviewing years of historical behavior. That shock, he found, wasn't unprecedented. It wasn't a contradiction. It was an outlier. Markets always contained outliers. The question wasn't whether the strategy avoided them, but whether it survived them. Slowly, clarity returned. The pattern still held, but the emotional toll was undeniable. Even the strongest conviction can crack under the weight of uncertainty. And as he prepared to move forward, he knew the next steps would determine whether his comeback was real or just another brief rise before a deeper fall. The stakes were rising, and the odds, though slightly better than before, were still far from being in his favor. The turning point came in the middle of an unremarkable afternoon, the kind of quiet trading day when nothing seems urgent. He noticed subtle shifts in the data, tiny deviations in the pattern he had spent months studying. They weren't alarming. They weren't dramatic, but they were different. And in a strategy built on precision, even small differences can grow into dangerous blind spots. He ran diagnostics, checked correlations, reviewed historical precedents. The pattern still appeared sound, but something in the market's rhythm felt off. His entries lagged by fractions. His exits hesitated. Trades that once aligned cleanly with his signals now arrived with a jitter he couldn't quite explain. The strategy wasn't failing. It was drifting. The conflict intensified when a series of trades moved sharply against him. Fast, synchronized, and unexpected. It wasn't the size of the losses that shook him. It was the nature of them. They broke rules the market usually followed. They moved in ways his data never modeled. For the first time since his rebuilding began, the foundation of his comeback trembled. He forced himself to stay calm. Panic had cost him before. Emotion had been his greatest enemy. So he stepped back from the screens and examined the environment with fresh eyes. That's when he saw it. A structural shift happening underneath everything. A change in volatility regimes. A recalibration of liquidity. A slow, quiet evolution reshaping the very conditions on which his pattern depended. It wasn't that the pattern was wrong. It was incomplete. And markets, unforgiving as they are, punish incompleteness. As realization settled in, he faced the hardest choice of his journey. Continue trading a strategy that had carried him out of darkness but was now showing signs of fragility, or pause everything and rebuild again from the ground up. Neither path offered safety. Both carried risk, but only one aligned with the discipline he'd promised himself he'd never abandon again. He pulled every open position off the table. The decision stunned people around him. Some thought he'd lost nerve. Others assumed he feared another collapse. Only he understood the truth. Survival was a skill, not a weakness. And stepping back was a retreat. It was strategy. But the market wasn't finished with him. Days later, a massive dislocation hit. One that blew through assets, crushed leverage trades, and vaporized months of profits for investors worldwide. Had he stayed in, his entire recovery would have been destroyed in minutes. Instead, he watched the chaos unfold from the sidelines, shaken but safe. And in that moment of clarity, something profound happened. The pattern he believed in, the one he had tested, refined, doubted, and defended, revealed its deeper shape. Not just a signal, not just a strategy, a framework, a map for navigating uncertainty rather than predicting it. The comeback was no longer a hope. It was becoming real. But the greatest test, his moment of true reckoning, still waited ahead. The climax arrived in the form of a single opportunity, one so rare that even the most seasoned investors might only see it once in a lifetime. A dislocation born from panic, amplified by volatility, and overlooked by those too afraid of getting burned again. But to him, it wasn't chaos. It was the exact scenario his rebuilt framework had been preparing him for. Prices swung wildly across the market. Liquidity thinned. Traders dumped positions in a rush to protect what remained. Yet amid the noise, his pattern appeared. Not faintly, not ambiguously, but with a clarity he had never seen before. It aligned across multiple time frames. It matched historical extremes. It offered not certainty, but asymmetric advantage. He took the trade, not recklessly, not emotionally, with the same discipline that had carried him through doubt, loss, and rebuilding. His order filled instantly, slipping into the vacuum left by those fleeing the scene. For a moment, the market hesitated, frozen between fear and opportunity. Then the reversal began. Slow at first, tentative, but then strong, sharp, decisive. A wave of buying surged back into the assets that had been oversold. Funds reversed positions. Algorithms recalibrated. Liquidity returned. And the trade he had taken, small, precise, disciplined, began to move in his favor with breathtaking speed. Hours later, the position closed at a level that would have seemed impossible days earlier. The profit wasn't just financial. It was symbolic. It marked the moment when he stepped out from under the weight of his past failure and into the reality of his comeback. The resolution arrived quietly, long after the screen stopped flashing. He didn't celebrate. He didn't boast. He didn't call friends or post online. He simply sat in the glow of the late-night monitors, reflecting on the journey that had carried him from devastation to clarity. He finally understood what had made the difference. Not genius, not luck, not timing, but resilience. The willingness to rebuild without ego. The discipline to step back before stepping forward. The humility to accept that the market is bigger, faster, and more complex than any single strategy. His story wasn't about beating the odds. It was about learning to navigate them. Subscribe to join the journey.